Right. Okay, guys, let's start this 12%. I'm mining for grade 11. I'm only 1%. Right. So, let's start with one. Now, today I'm going to start the second. Right. So, you know the guidelines. I gave you the guidelines. What are the guidelines? So you can use any material, right? Minimum 5 minutes, maximum 7 minutes. Sorry,
सर मैक्सिमम 8 की लगी हुई
7, 7, 12,
लगी हुई 8 की
7, right? Okay, so we start from Hitman, bank reconciliation.
පටන් ගත්ත ගමන් තියෙන්නේ
How can start, right? There is something or not, or you can do whatever you want. Just wait. Just- Right. You can share. Fine.
hello friend
Yes, sir.
today about bank reconciliation statement. First we are going to check my content today. Is a bank reconciliation statement. Reasons for differences between final balances. Adjustments in bank reconciliation. Steps to be followed when reconciling. Bank reconciliation statement. Reconciling your bank and financial records ensures accuracy. Differences can arise from unclear transactions, fees, and errors. The reconciliation process identifies and resolves these discrepancies. Reasons the check issued but not presented to the bank for payment. Uh, this reason increase the bank statement balance and decrease the bank account balance of the business. The second one, the checks deposited but not realized. This affect for the bank account balance of the business and it is increased. Third one, direct remittances. It affect for the bank statement balance and it is increased. Fourth one, the payments on standing orders and if it affect for the increasement of the bank account balance of the business. If the and check charges, it affect for the bank account balance of the business and it is increased. Adjustments. We debited adjusted banks are direct remittances. Sometimes we take it as debtors remittances. We are credited standing orders and the bank charges. We are at some transactions to the bank reconciliation statement are unpresented checks. We are subtract unrealized check from the bank reconciliation statement. Steps to be followed when reconciling. First, we need to checking the differences between bank statement and the bank reconciliation statement and the bank account balance in the business. Then we need to identify the reasons for the differences and we need to adjust those balances. finally, we need to prepare the statement by adjusting those balances. L- Let's take an example for reconciliation. First we need to first we need to transact the favorable balance of the business to the adjusted account. Then we need to check whether check whether the differences, uh, and we need to record it under the relevant statements. Uh, Here I take the direct remittances data to the account, it is debited. Then I take standing order to it's credited in the adjusted bank account. Then I take bank charges, it also credited. Then we need to balance the bank adjusted bank account. Then we need to then transact the adjusted bank balance to the bank reconciliation statement of the business. Later on, we add the check note presented to the bank as like here. And then we need to record the list transaction, which means the unrealized check. Then we need to balance those things and get the final bank balance as per the bank statement. Here I show the all records I take in here.
Right.
Thank you for watching my presentation.
Right. Okay. So keep a clap. Right. Well done. Nice. So can you share it again? I want to the comments. Right?
Yes,
So
okay, sir.
part is all about bank records. So let's first slide, please. I have the comments down here. So when it comes to your presentation, others can please tell me? So I will give the comments. So bank reconciliation statement, right? First, let's move the next slide. Content, you can see what is the bank reconciliation? Reason for the difference between final balance and adjustment in the bank reconciliation. Steps to be followed when reconciling. So this is the content. When you prepare a presentation, prepare to put the outline. Okay, then let's move to the other slide. So you can see what is the term for bank reconciliation. Reconciling your bank and financial reporting. Differences can be from unclear transactions and reconciliation process identified resolve and resource these issues from Google. You know it, but we can add more things when it comes to the bank reconciliation part. You know, what is the term of bank reconciliation? Uh, you know, normally bank reconciliation you know, business bank account balances and the business bank account balance, the bank statement sometimes every time bank statement balances, bank account balances. So because of that, when you identify the risks, we need to adjust it. Right? That is the key. When you identify the risks, you check it. These are the correct risks. Right? So that's why you do here bank reconciliation. Okay. The then you know Range for the difference between bank balance and balance of bank account banks. First one, issue part percentage bank operating because of that you can see has been recorded only the bank statement, debit side, but not recorded in bank account, credit side. Say, issue, sorry, issue part percentage bank operating, issue part percentage bank operating. Credited the bank account of the business, but not recorded in debit side of the bank statement. I mean, because of that, in here, bank statement of bank account balance. And deposited but not made. The money was created. Yeah, we are receiving other young they are upgraded. They want to give the others. आणि थोडा थोडा Okay. So in here you can see the deposited but not realized, deposited but not realized, reported debit side of the bank account but not recorded in credit side of the bank statement because of that bank account balance is bank statement. Direct remittances it's reported only in the credit side but not recorded in debit side of the bank account because of that bank statement balance is bank account balance. Payment on standing orders recorded on the debit side of the bank statement and not recorded in credit side of the bank account. Because that this bank account balance is handled bank statement. But I think we have start to last one month but long last one last period bank charges charges income bank charges maybe I reported debit side of the bank statement but not recorded in the credit side of the bank account. Because of that, bank account balance is bank statement. It's food service. Right. So I just in the bank reconciliation, we debited these things to adjusted bank account and we credited these things to the adjusted bank account. We had this one bank reconciliation and we uh, bank reconciliation monthly one. We have this any more.
So දාලා තියෙන්නේ එන්න වෙලා යන සිග්නල් අවුල්.
Steps to be followed when reconciling checking the differences, identifying its balance and preparing bank reconciliation. Next, you can see this is an example, right? We identify the differences by comparing debit side of the bank account and credit side of the bank statement, and credit side of the bank account and debit side of the bank statement. Here we have a ticket account and here a circle. And this bank account balance කරා මෙතනට දානවා. One bank statement එක circle and this bank account. Uh, this is direct remittances we are adding and bank charges standing orders we are crediting. And after that we are taking types of bank account balance and we are issue part of the bank. Part of bank can identify bank. Isuകളെ മറ്റുമായിട്ട് പങ്കെടുക്കാനാണ് മെയിൻ ഇത് വളരെ ക്ലാസ് ആയി plus I minus C, right? Plus I minus C. Two part bank for payment we are in, and we are ready. So we are in this portion part one we are. Then we can have the balance transfer bank statement. Make more. Then then we closing balance is 30. Maybe closing balance is 23,000. I have probably reasons for that. Bank final answer contained. Bank statement is closing balance. You can update it. Means in some influence that's what we do. Yeah. What we do in here, we take once we get the final balance bank is similar to the bank statement balance, but these are the differences. These are for the process for these two differences, right? Differences in bank account balance and statement. I feel it's okay. I think that is the final thing, right? Right. So we appreciate your effort and we will apply the very nice. Right. Okay, we understand everything. Okay, thank you. Right. So in line with the time. And then I will all its time. So unlike presently purchase is the you can stop the show. Quickly, the signal negative one, negative and quickly, but after arriving signal activated like yeah, right.
Okay, so good evening, everyone.
Okay, just wait, 1 minute. All right, now
Good evening, everyone. So I'm going to talk about parliamentary books today. So, what are parliamentary books? Parliamentary books are the initial records used in accounting to document financial transactions before they are transferred into the general ledger. They serve as the first point of entry for various types of transactions, ensuring accurate tracking and organization. The necessity of uh, books. Similar types of transactions can be classified and recorded. Posting transactions to the ledger becomes easy and systematical and convenient. It minimizes possible errors and frauds. It is also easy to maintain and it also minimizes the accounting errors. So it's a source document. A document prepared by including all the details of a transaction taken place in a business by authorized by a person in charge is known as a source document. So this is the interface of the relation between transactions, source documents, and parliamentary books. The key types of parliamentary books: the general journal, sales journal, and purchase journal. General journal. This is the normal interface of a general journal, and an example. The general journal is a fundamental tool, is a fundamental accounting tool used to record all types of financial. The purpose of using the purpose of using the general journal is the flexibility. It captures diverse transactions such as adjusting entries, closing entries, and any other transactions not specifically recorded elsewhere, and also the comprehensive record. It provides a complete view of all transactions, making it easier to track the financial history of the business. Sales journal. This is the interface of a sales journal and an example. The sales journal is a specialized accounting record used to document all credit sales transactions made by a business. The key features of a sales journal is the focused purpose. Exclusively records sales made on credits, allowing for easier tracking of accounts receivable. The format typically includes columns for dates, customer name, invoice number, and amount of sales, which makes it easier for us to understand. The purpose of sales journal is efficiency. Streamlines the recording process for credit sales, reducing errors and simplifying accounting, and also monitoring receivables. Helps business keep track of outstanding payment from customers. The purchase journal, a specialized book used to record all credit purchases of goods and services. This is the interface of a purchase journal and an example. The key features of the purchase journal is that the entries include date, invoice number, supplier's name, amount and purchase tax. And the only credit purchase are recorded and the cash purchases go directly to the cash book. The importance of purchase journal is that it helps to manage accounts payable and essential for inventory management and financial reportings. Thank you.
Right. Okay. So well done. Give a clap. Right. Okay. Nice. So shall we move to the first slide, please? The time is remaining time is 43 seconds. ටක් තප්පර 40 ගානක් විතර කලින් ඉවරයි. Right? Okay. So never mind. Let's first slide please. Now we are making about purchase sales and general. So but you present to explain it and explain about the finance, so everything. So you and we appreciate your effort and that's certain imagination party those and the other. Later you explain about how to get the ledger accounts part related to purchase and general. How to report the purchase or closing and how to report sales journal, how to report take some and explain that. Then we can have a clear idea about revenue. We can think about filing initial reports in the account within final transaction before they are transacted, right? So that is nice. Yes. Yeah, you can see the necessity of the primary good. Like these are so different and defined given the source documents and defined, right? So in source document it is an edition of the class, cash book and the petty cash book are the links levels. So three types of primary books. Depends general journal, sales journal and purchase journal. Nice. Next slide. First of all, Sanjana discuss about general, right? And it's some example. It's So this is about the purpose of the general, right? Purpose, basic, and purpose. We understand. And this is the sales structure and some Google, right? So this is another transaction report. We report credit sales of the sales level. And we record the credit what are purchase. Every credit purchase we report in the purchase. What is the other thing? At the end of the month, purchase account limit, we have right? When it comes sales account, hope you can remember, we record the credit sales at the end of the month. We credit the sales account and we debit the relevant returns. So let's move to the next slide. So, right, okay, next one. In future, and the purpose is related to the development funds. So this is the purchase credit purchase things we record in future, and you can see the format, right? The key feature that we report, right? So we are in that in you will know the what are the processes before in the general, in general report, so and also credit based non-current assets purchase and basic non-current assets transfer. Error correction entries, adjustment entries, open balance, report, right? Later you will explain about these things also. I don't know and better we appreciate. Thank you, right? Okay. So other things, let's move to the other one. Today, cash will be discount. It continued on next time. Okay. Right. So today we can discuss about that.
Wait a minute, sir.
I think that right. You're right.
There's a music එක දාන්න පොරේ.
होगा
සර් එහෙනම්
yes, you can start. Over to you, right? I'm starting the countdown, right?
yes. Okay, sir.
Next. Yes.
Good evening, everybody. Today I'm going to talk about cash book with discount. Cash book. What is cash book? Cash book is the primary book. ඔව් සර් කියන්න.
Right.
එපා. හරි හරි. නිකන් කියන්න.
Start. Go to the
ඔව්. Good evening, everybody. Today I'm going to speak about cash book with discounts. Cash book. What is cash book? Cash book is a primary book. This records transactions related to all cash receipts and cash payments. And this is a simple structure of a cash book. Let's see some transactions of cash receipts. Uh, Receive money from owner's capital, obtaining a bank loan, receive money from income sources, cash received from debtors, cash sales, and cash received by selling fixed assets. Let's see the transactions of cash payment. Cash payment for expense sources, payment of bank loan, purchase of fixed assets, payment to creditors, cash purchase. At last, cash drawings. Let's talk about source documents. There are two types of source documents. One, receipt, then payment voucher. If you talk about receipts, uh, when a business receives cash, will issue a document called receipt to the party who gave money to the business. A receipt is the written evidence of a cash received by business. There are some factors included in a receipt. Date of cash receipt, the reason why it was received, the amount received, the signature of the cashier. There's no specific format for a receipt. If we speak about payment voucher, the payment voucher is a document prepared by business with the relevant details as an evidence that are made. A duplication of the payment voucher should be received by the accounts branch and it should be used as a source document to record the cash payment in the cash book. There are some factors should be included in the payment voucher. Date of payment voucher, the amount paid, the reason why it was paid, the signature of the cashier and other. And there's no specific format for payment voucher. If we talk about the dual functions of the cash book, it acts as a function of a prime entry book and a function of a ledger. Discounts. There are two types of discounts, trade discounts and cash discounts. And those two can be divided further. Discount allowed, discount received. What are discounts? Discounts is the deduction of a value from a value of a transaction when it is take place. Trade discounts. The deduction which was made from the listed price of a good is called trade discounts. The deduction is a trade discounts allowed from seller's point of view and discount received from the buyer's point of view. Cash discounts. Cash discounts come into being when amounts are received from debtors and paid to creditors. If you talk about discount allowed and discount received, uh, discount allowed is a deduction made on the amount receivable from the debtors. The discount received is the amount deducted by the creditors from the amount payable to them. Uh, Simply, discount allowed is an expense and discount received is an income. If you talk about the double entry of the discount allowed is uh, discount allowed account debit, debtors account credit, creditors account debit, discount receive account credit. Let's record some transactions in the cash book. And these are the transactions that I'm gonna record in the cash book. Uh, Cash book debit, capital account credit, purchase account, cash book credit, purchase account debit, mm, cash book debit, bank loan account credit, furniture account, debit, cash book account credit, cash book credit, shop rent account debit, uh, cash book debit, sales account credit, mm, cash book debit, debtor pawan account credit, creditor surat account creditor surat account debit, cash book credit, uh, drawings account debit, cash book credit, interest income credit, cash book debit, cash book credit, and bank loan debit. Let's record some transaction in the cash book with discounts. These are the transactions that I'm going to record. Uh, the balance brought forward is 50,000 in the debit side. Cash book debit, book the account credit. Sanod cash book debit, Sanod account credit. Uh, Cash book credit, Manisha's account debit. Situmini's account debit, cash book credit. And DC the 72,000 is the total of the whole thing, and 3,000 is the total of the discount allowed, and it is debited to the discount allowed account. Discount received is 2,400 and it is credited to uh, discount received account, and the balance brought forward is 40,000 and balance carried down is also 40,000. And thank you for watching my presentation.
Right. Okay. Nice. Right. Okay. Good explanation, but it's time. Right. Okay. So sorry. So beautiful. Okay. Nice. So I'll give the comment briefly because no enough time. Shall we move to the slides now? When I see about your presentation, I hope that my starts 80% and first thing what I want to tell you, when we do professional presentation, especially in the university level, books, they will give you when we do presentations, we don't play background music for never mind, right? And the other thing what I want to tell you, India you discussed about both fully detailed discussion about this part. The major topic is about you give more weight to the cash discount part. And the other thing, mainly when it comes to functional presentation, don't expect more than presentation time exceed the video. Right? So everybody talking about it, even master, right? So don't expect time that much. Right? You need to Real high, right? So it's better the ball cash to part is more discount. And in here I give very so many uh, information about cash. Can you quickly know the first slide? They are different, right? Home, home. Next slide. You can see about the cash. Quickly, let's move here. Product animation start the considerations. Cash is a binary cash balance is there. Is a format. And you can see these are the cash receipts. Delta next start, right? And you can see the cash payments of the list. You can see cash payments of the idea. And then we discuss about both the people one for the cash and even about data. So let's move to the other one. Then you can see the receipt like why when we receive cash we shoot the receipt. And when we issue cash, through that we issue the payment box, right? Then after that you can see about the lower function of cash, the primary function of the reserve function. Next, the other side. You guys the discount parts. So we are here credit discount and cash discount. Very good. Right. On the slide. Then you discuss about what are the discounts and what are the credit discount, cash discount. Very good. Let's look at it. And discount allowed and discount received we discussed about. These are the cash discount received and cash discount allowed. Okay, moving to the other side, please. Right. What I mean, maybe what we are transaction payment part cash payment transaction payment අපිට ඔයාට debit card credit transaction ठीक है ये करना
එහෙම පෙන්වන්න බෑ සර්.
මගේ okay so yeah right and and you must really be welcome. And the other thing, I now we are going to finish the class and the other thing is a picture I mean host on really talking about petty cash to get ready for the petty cash. මේක දුන්න දිහා next කරන්න. Okay, addition, Category Christina, this is Sylvie, now published next week. Okay, this is now for today. I learned many new things and really appreciate your effort. Those who have done it. And if you want, let's meet on next week. Bye.
Good night sir.
Good night.
Thank you, sir. God bless.
Sir, nice. Good night.